This is an introduction to accounting, part one, the accounting basics. The information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including, but not limited to, Irvine Valley College, the South Orange County Community College District, or Chapman University. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. The presentation is copyright 2008 to 2019 by Bennett Tchaikovsky. I encourage you to share this presentation and share links to this presentation on an unmodified basis. If you modify the presentation in any way, please email me prior to doing so at bennett1812@gmail.com to discuss. Note that the author does not claim any copyright whatsoever in any companies or organizations mentioned in this presentation. The other parties are the owners of their respective copyrights. About me, I graduated from the University of California at Santa Barbara. I became a licensed CPA in California, and then I went to Southwestern University School of Law, graduated with my Juris Doctorate, and then I passed the California bar exam. I've been teaching at Irvine Valley College full-time since fall of 2014. And I've taught and am teaching accounting at Chapman University. I've worked as a chief financial officer, controller, and board member for not-for-profit and for-profit organizations. My goal in these presentations that I've been making is to really help you understand and learn accounting. Ideally, I want every single person I meet to become a certified public accountant, but obviously it's probably overreaching. Rather, I just want you to be really familiar and to understand accounting, and especially the limitations of accounting, which are extremely important for you to understand as you're starting or as you are in your career, in your business careers. So what is financial accounting? A lot of times people will say it is the language of business. I don't really agree with that because I believe that every single industry has its own terminology or language. For example, if you're a retailer, you may refer to inventory magically disappearing off your shelves as shrinkage. If food is going bad at your restaurant, that might be spoilage. For some restaurants, it's opportunity. For insurance companies, they have a term called reinsurance, whereby they mitigate the risk by spreading it amongst themselves or other different insurance carriers. And if I'm an actor or director, I might be a net profit participant, or I might be a gross profit participant. So those are really, when I think of language of business, I'm really listening to like the inner language within each industry. And that's one of the great things about accounting, is that if you work in it, and you work for various different types of companies, you're going to learn their business. You kind of have to in order to provide services for them. But if accounting is not the language of business, then exactly what is it? I kind of define it as the universal way that transactions are recorded, summarized, and then externally reported. And the reason why accounting is so important is that it's essentially the set of rules that are followed by all companies that are publishing or issuing their financial statements. There's not a separate set of rules from one company versus another, and these rules are very important to understand in terms of how we want to be recording transactions in the same way, because then I can compare, or it gives comparability from, say, Target to Walmart. When I look at their financial statements, they have comparability because they were prepared under the same accounting standards. The other part is consistency. Why are the rules important, and why is accounting important? Is because these rules will be consistently applied period over period in terms of how revenue is recognized, so that there's a consistent set of rules that is essentially applied to when we're going through and creating financial statements. The most important thing to remember is when we are looking, though, at financial accounting, is really the overall objective of it, which is to be providing useful information that benefits the end user of that information and of the financials. And I cannot stress the importance of this to you, because when it comes to a lot of other accounting concepts, such as materiality, it really is about the end user. Would it change their decision if a user of these financial statements saw something being prepared in a certain way? So every single business or organization has an accounting function. It may be one person, it may be thousands. But this goes through here: sole proprietor, not-for-profit, small business corporations, limited liability companies, limited liability partnerships, and just regular partnerships. And the size of the accounting department or the function will really depend upon the size of the organization. If you have a company like Apple, which has millions of dollars of, or I should say billions of dollars of revenue, they're going to have a very large, not only a financial accounting department, but a tax department, sales and local tax. They have a lot of transactions which are essentially affected by accounting or tax laws. And so when you look at this here, it's, every single business has these different types of functions. And if you're ever wondering why it is important to become a certified public accountant, I want you to go to Indeed and type in CPA and see what comes up. Being a CPA is really the gold standard. And one of my professors at UC Santa Barbara told me, and he essentially said to us in our classroom, is that if you are working in accounting and you are not a CPA, you're essentially a second-class citizen. And I don't mean to be derogatory by saying that. It's just throughout my career, I have run into professionals, and these professionals are making $150,000 a year working as a controller for a company, but they're not CPAs. When they leave, their salary goes down to about 60 if they're lucky. So as you move up the ranks, it is extremely important that you become a licensed certified public accountant. The other part right here is that, tax laws are very, very complicated and they're always changing. One of the things I've done here is I've kind of highlighted, or I'm kind of showing here, this is NYU, and these are the various, and it might be a little bit hard for you to see this. But if you take a look at how broad tax is, look at this. They've got corporate tax 1 and 2, estate and gift tax, trust and estates, international taxation, international tax 2, multi-state. There is just so many different areas of tax and accounting, but it's very, when you think about it, when we think about accounting, every single business has to pay taxes. And where does that basis for the tax come from? It's really coming from how we're going through and initially recording our financial statements. So again, there are a lot of different opportunities in accounting. There's not only tax, but you can also do, say, you can be a chief financial officer, a controller, accounting manager. You can be an external auditor. You can be an internal auditor. Because of Sarbanes-Oxley, it's created a lot of different job opportunities. There's another side of this too, is that there's other reasons that even if you're not going to be in accounting, there's a reason why you want to hire a certified public accountant, is because they're held to a higher standard. Even if we're not practicing accounting and we are actively licensed or inactively licensed CPA, if I do something crazy at my employer, I can lose my CPA license. So for those people that are in fact CPAs, we are in fact held to a higher standard than a normal accountant. And this is really why that if you are a business person and you're just learning about accounting, you want to have a CPA in those senior financial positions. If you don't have one, it's a problem. And I can't really emphasize that enough. The other part of this is that, will accounting become obsolete? And I don't really know how to answer that question. I'll never forget, I was at a conference and the controller for Southwest Airlines was there, and she saw this and she visibly freaked out. And It could be, but I think what's going to happen is that I think that more and more menial type jobs are going to be outsourced to other places or automated. But there's always going to be a need for CPAs, at least for the foreseeable future. There's also a very, very strong demand, and this is January 2019. There's a huge demand for CPAs right now. So I don't see it really, I don't see it becoming obsolete, but it's something that, again, you have to put it out there because it could happen. Now, the other part of accounting, and really when you're learning how to record transactions, you're also learning about business operations. And the reason why I encourage my students to go in and become a licensed CPA, even if they don't practice being a CPA in their jobs, is that by going through and doing the training as an auditor, you're learning about how business operations are set up. You learn about business on the job. I cannot think of a better job coming out of undergraduate for where you're really going to be getting that great of experience, especially like on the business side. It's a great, great first job to have. The profession is highly respected. And again, if you're looking here at a career, it can be a great one. It's a long road to become a certified public accountant, but it's definitely doable. So I'm listing out here the rule makers, or those parties that kind of set forth the accounting rules. The overall patriarch is really this U.S. Securities and Exchange Commission. They're ultimately determining the reporting requirements for U.S. GAAP and then for U.S. publicly traded companies. Generally, they defer most of the U.S. GAAP rule setting to the FASB, which is the Financial Accounting Standards Board. And then you have other parties such as the AICPA, which is the American Institute of Certified Public Accountants, which is setting ethical standards. And, note, not every state follows the AICPA model, but it provides to be a pretty good framework. And the AICPA also contributes to the development of U.S. GAAP. IFRS is something called International Financial Reporting Standards, and there was a huge push a few years ago to have the U.S. converge into the IFRS, and there's still a few things that are different about U.S. financial reporting standards and international. But, as of right now, the SEC has kind of said, no, we're done. So you'll see some academics mention this, but again, it's something that's important to learn, but not right now. Accounting is a lot, and one of the things is when you're learning accounting, I don't want you to be drinking from a fire hose or have the kitchen sink or have so much information coming at you all at once. I'm just putting this up here just so you know kind of who the people are that are behind, the individuals or organizations are behind making the rules for accounting. And the reason why it is so important to understand accounting is that there are certain things that when we are looking at accounting transactions is really about, there's a lot of things that aren't necessarily reported, or that things that don't involve cash but make a company look horrible. And the first example of this is Snap. And Snap is Snapchat. And when we look at Snapchat, and we can take a look here at the, wow, it's Zoom, great job, Tchaikovsky. Okay, so if I look at Snapchat for the 9 months ended, we can look at 2017 or you look at 2018. But Snapchat right here has $1 billion loss. Okay, so these amounts are in thousands. So Snapchat, it looks like that they lost $1 billion for the 9 months ended December 31st, 2018. It looks like they lost $3 billion in 2017. But is this truly the amount of cash that they lost? And that answer is no. The reason why it's no is because under US GAAP, if Snap gives stock options to its employees in the form of stock compensation, which does not cost Snap anything, meaning that they're giving the employees the option to buy stock. When they give that option, they have to record something called stock compensation expense. I'm not saying it's free to the company because, again, shareholders may suffer dilution, but from a cash perspective, it's not a drain. It's not cash. It doesn't really cause the company any type of cash loss. And if we look here at the statement of cash flows, and I know I'm now telling you something different. If I look at the cash, so we said that right here for the 9 months ended September 30th, 2018, they had a net loss of $1 billion. 416 million of this was stock-based compensation. In the prior year, it was 2.5 billion. So when we're looking at some of these numbers, it can be extremely misleading. And this is why you need to understand and know accounting. The other one right here that I'm going to go to is talk a little bit here about Macy's. If I look at Macy's, and this is for as of November 3rd, 2018, I go down here to their property and equipment. And it says here net of accumulated amortization of 5 billion, 4.6, and 5.3. But on Macy's books, they have property and equipment listed at 6.5 billion. Now, if I went to, there's an article right here. This is from the New York Times, and right here, the real estate of Macy's is now worth more than the market value. And this was as of about a year ago. But several different analysts estimate that this amount right here in terms of Macy's on their financial statements of 6.5 billion is worth closer to between 16 to 17 billion. So why do I go through this and why am I showing in the fire hose? Is because what you see on financial statements may not necessarily be the true picture of a company. But it's because we have, as financial companies have to follow a certain set of rules. This is why they have to record the transactions in this way. They have to go through and record stock compensation expense of $2.4 billion, even though that has no drag on cash. So this is really why it is so important for you to understand accounting and what the limitations are of accounting, mainly that when you pick up a set of financial statements, you need to kind of be able to say, okay, well, how do I bring this thing into reality? Are these numbers truly, as an investor or as a creditor, what are these numbers really showing me? Okay. So let's talk a little bit quickly here about accounting ethics. If you don't have any ethics, you probably should be in another profession. One of the reasons why I've never practiced as a lawyer is that I think I would have a very difficult time advocating for someone I know who is guilty. And there's a great ESPN documentary, 30 for 30, where the agent who is highlighted in that film, who is representing both Dan Marino and John Elway, said he was, representing some, individuals in, legal matters, and later found out that they were guilty. And he just said, hey, I can't do this. And this is really where, as an accountant, you're really kind of, at the end of the day, you're really trying to make sure that the best thing happens, not for you, not for your firm, but really, does that information, is that going to the end user correctly? And as an accountant, you should really be surprised, you should really strive to be beyond reproach, meaning that you're going to be behaving at a very, very high standard, where no one's going to really question what you're doing. And another part in terms of accounting ethics is that a former CEO of mine, and actually, I'm sorry, going back to that 30 for 30 was Marvin Demoff, who was the agent who was in that. It's a fantastic documentary, 30 for 30, Elway to Marino. But going back here to the advice from a former CEO, What he told me is he said, do two things. Do the right thing, and the truth will set you free. The truth will set you free is a little bit easier because if you lie, it's only going to compound. We can look at the Pinocchio example. The lies just get bigger and bigger. You can watch the Black Mirror episode Crocodile, where it kind of takes it to a pretty insane extreme, where somebody's trying to cover up their crime and they will do anything they can to hide it. But in reality, you're just better of owning it and moving on. The other part right here is doing the right thing. And doing the right thing is a very, very tough thing to do because you don't know if it's really about, if I do the right thing right now, if I look back on my decision 5 years from now, did I make the right choice? And that's what's really hard. It's not easy to do the right thing. The best advice I can give you is you're going to learn from your mistakes, and time is if someone's asking you to make an immediate decision, always take time to try to reflect. There's always tomorrow. If you're making a quick decision and you haven't really thought it through, that's kind of where, again, you're not Bill Belichick on the side of the Patriots and, trying to get to the bowl. Rather, what you're doing here is if your company's in a situation or if something happens, you want to do the right thing. And it's really hard because, look, as an accountant, you're handling money. And when you're handling money, people go crazy. People get really weird. If you've ever been involved in a family dispute over an estate or any kind of a family business, it's awful. And that's really why, as an accountant, this is really why you have to have such a high set of morals, because they will be tested to no end. So again, I'm kind of briefly mentioning a lot of these things here, but it's really just to kind of give you a little bit of a background as you start going through and exploring accounting. So that's it for this first part of this video. I want to thank you for watching. If you have any questions or comments, please send me an email. My email address is right up here on the front of the disclaimer. You can send an email to me at bennett1812@gmail.com. Thank you for watching, and please don't forget to like and subscribe. We'll see you at the next video.